stress test hit the banks a week from tomorrow, and there could be some big changes in store for the big banks. U.S. banks paid out a combined $32.7 billion in dividends in the first quarter, or almost double the profits they earned. Options traders are betting that won't be the case for much longer. CNBC.com's Hugh did some digging, found that JPMorgan's dividend in particular may be on the chopping block. Hugh, what are traders telling you?
So traders are merely telling me what they are observing in the market. And if you look at the options market and you look at JPMorgan, the options imply a 33% cut to their dividend by January. And as you know, JPMorgan is sort of the best in class. You know, they had a record year in earnings last year. And so this is something that's kind of remarkable to me, that there's this sort of dissonance between the expectations and, you know, if you talk to the sell-side bank analysts, particularly for JPMorgan, everybody's relatively confident that they're all going to pass the stress test, with the perhaps exception of Wells Fargo.
Yeah, I'm going to bring in Karen into the conversation. And Karen, this also is completely discordant with what Jamie Dimon himself has said about the dividend.
Right. I mean, he talked about, you know, cutting the repurchases was a much bigger deal than the dividends, which I think he called it sort of a drop in the bucket. I would be surprised from what they've said so far, unless this quarter is just so much more. I mean, unless the provisions are going to be so much bigger than they thought when they announced in April, that I would be surprised if they cut their dividend, actually. It would. I mean, stranger things have obviously happened. Wells Fargo, they really should be thinking about it. At 7.5% yield, they're just not getting the benefit. That yield is ridiculously high.
Yeah. Dan, what would you make of this sort of action? Is there another way to explain it?
There's no other way to explain it other than the fact that it would be a cataclysmic event for bank stocks in 2020 if JPMorgan, best of breed, were to cut their dividend, especially when you consider we keep hearing again and again that the banks are not the sources of this crisis, that their loan loss reserves are in good state, that the valuations are very reasonable. But I think it's really important to remember that JPMorgan does not act well. It is down 20% or 28% on the year. The S&P is down 3%. It is telling you about back half of the year bankruptcies that they're exposed to, that those loan loss reserves are not adequate, that they will be ticking higher. And that's what the implied dividend cut is also telling you. So I keep saying this. Yeah, I'm getting whipped around here with this trade in the banks, but they're telling you something, and they're telling you the same thing about the crowding in the mega cap tech names and the speculation in the bankruptcy names and the day trading stuff. It's all telling you that things are not exactly sound right now. And so I don't know. The S&P 500 down 3% in the year, given this pandemic that we're in, getting this economic crisis, something smells really bad here. I'm not talking about a crash, but I'm saying that the equity market is divorced from the economic reality of what we're facing. And JPMorgan and that implied dividend cut says a whole heck of a lot more about it than what the MAGA stocks are telling you.
Getting back to Hugh, though, yeah. I mean, every single bank is expected to pass, I mean, aside from maybe one, to pass the Fed stress tests with flying colors, correct?
That is the default expectation now, and I think it's important to bring this out here. You know, the X factor here is the Federal Reserve. These are the guys who are running the exams, and nobody knows really how tough the Fed will be. So you had some recent comments to talk about an increase in potential scrutiny tied to COVID-related loan loss. And as you know, there are so many millions of Americans who are in some kind of loan forbearance. Whether or not these people start actually repaying once the forbearance ends, I mean, this is an X factor. So you have the Fed stress test being an X factor. For the first time, they're implementing something called the stress capital buffer, which is another X factor. So more than any time since, probably 2011 or so, there is this wide range of outcomes that you just don't know what's going to happen. And I think that's represented in a lot of the activity in the options market right now.